What's up, investors? Chase here from the Note MBA podcast, and this week's episode is straight fire! It's fire! It's an incredible episode this week. We talked to and interview Sándor Lau. He's an amazing investor, outdoorsman. He's done documentaries before. He's a filmmaker, award-winning writer. I mean, he's just a really cool dude. We talk all about seconds, different strategies, different ways that he looks at due diligence, where and how to find deals. We also talk about something called ikigai. It is a Japanese phrase that I'm sure you're going to know to love, grow to love. You're going to love it. Anyway, be sure to check out this week's episode right now.
Roughly 200 notes through my portfolio since I started in 2013. I've only ever foreclosed on 2 houses. We do everything we can to avoid foreclosing. If we have to foreclose, they really foreclosed on themselves.
First, seconds, performing, non-performing? What the f***? Note buyers, when it seems like you're in this business alone, know Chase, Robert, and the rest of their tribe are at it every week. They're bringing updates from their own note businesses as they work to find, fund, and finish deals. Follow along as they share their grassroots education with you, tuition free. If you'd like to know more about what they do and to download the entire back catalog, check out notemba.com. Now, here are your hosts, Chase Thompson and Robert Woods.
Hey everybody, welcome to the Note MBA podcast, your home for note investing on iTunes. I am Chase Thompson, joined today by a very special guest. We have been we've been bringing so much value regarding this like May, the month of seconds kind of content recently. And today we have a guest that is absolutely going to speak to that and just a ton more stuff. So I'm very, very excited to be bringing him on the show. I got a chance to meet him for roughly 30 seconds while I was in Vegas, and it was a pretty energetic conversation in just the 30 seconds, if you can imagine me, and then you're going to hear him talk, and if you've ever met him in person, you know it was lights out. It was an absolute lights out conversation. David, you were not with us in Vegas, but I can assure you there was just a ton of energy. It was pretty rowdy. It was fantastic. But to give you the only intro I think I can give is actually the description. I think it's on his website, but it's specifically on his YouTube channel. So I've got to read out this intro, this little about to intro him to the show. So he is the only Chinese-Hungarian-American-New Zealander and Eagle Scout and Fulbright Scholar your mother warned you about. He is Sándor Lau. How are you doing, sir?
Chase, I am doing great. I was, of course, born in a good mood, so I'm pretty much always doing great.
I love it. Listen, you could add like real estate, obviously investor to that. You could add the active outdoorsman, filmmaker, right? Documentary filmmaker. I mean, there's so many award-winning writer. There's like so many other things, but nothing is better than I think the Eagle Scout / Fulbright Scholar / Chinese-Hungarian-American-New Zealander your mother warned you about. I think it's fantastic.
Yeah, I'm also I think of myself now as a recovering writer and filmmaker constantly threatening to relapse.
One of the listen, right off the top, we're gonna get to the investing stuff. We're gonna get to a bunch of stuff. But that's really funny that you would say that. One of the people that is kind of a business coach from afar for me, he recently talked about the idea that speed is a force, right? Like. And the further away you move from a project you really want to do, the more excuses you'll make, right? The more you'll delay and you won't ever take the action and do all this kind of stuff. So speed being that force of like actually getting things done and doing things. So listen, man, if you got more films in you, you got more writing to do. I think you got to attack it.
I absolutely do. And that's, part of the passion that drives me in the notes business. Success in the notes business gives you the most precious resource that each of us has a very limited and unknown amount of, which is your time that you're never, ever getting back. All of us are essentially the same, right? You're born naked and helpless, and you're going to die someday. Everyone is equal in that aspect. What you do in between those times is only your choice.
You guys, so we're going to be linking up a ton of stuff in the show notes for today. We're going to have a bunch of his videos over from YouTube that we'll be linking up. And of course, we'll have something to share with you kind of towards the end about an event that he will be at regarding the mortgage note space. So if you get a chance to make it out to that, you have got to meet Sndor in person. The energy that you bring to like everything is just tremendous. But let's dive in on the notes side. So can you give us a quick understanding, like what got you into this space? I know that there's obviously, like I said, some really great videos. And then of course, anybody that saw your presentations at PaperSource and things like that kind of have a background of how you got into real estate. But your entry was very much the way a lot of people got in, right? Like read some books, thought you could do it, did a couple deals, some went well, some didn't. And you know, because kind of walk us through a little bit about where your background is, and then maybe a little bit why you chose seconds over, say, first, or if that was just maybe sheer happenstance.
So yeah, I mean, I came to the notes business really and real estate business out of a very difficult time in my life. I had made some award-winning films that played at festivals, won prizes. I was a TV reporter in New Zealand, and the artist part was great, but the starring part was just not sustainable. So I needed to find another way. I read some books that said, yeah, if you want to be rich, all you have to do is have a lot of money and then just invest it and you'll have even more. Okay.
Sounds
what
easy
else?
enough.
Real estate is the simplest formula. A real estate loan is the only kind of loan you can go to the bank for, and you don't have to explain to them. They know. They like invented it, right? Here's a mortgage. The rent pays down the mortgage. The property value goes up. You save a lot of taxes. Yeah, it's genius if it works right, if you have the right tenants and management. So some of my initial properties I invested in worked well, and some of them, you know, people threw a microwave out the window. If people don't understand already that they shouldn't do that, no amount of my explaining that to them can change their mind. So I needed a new formula. I discovered the videos of my mentor in this business, Gordon Moss, which are just genius. They explained why the notes business, you can being a landlord is a lot better than being a tenant, right? Landlord, you make the rules, but you're also beholden to the tenants. They have a lot of laws in place in nearly every state. They're very favorable to tenants. And if they decide they'd prefer not to pay, most people think, oh, they're the ones in trouble. No, you, the landlord, are in trouble. The notes business, you can be the bank. Anyone can be the bank. Being the bank is way better than being the landlord. I mean, when the tenant was not paying rent and throwing the microwave out the window, guess what? I still had to pay the mortgage on that house. The bank didn't really care whether I was getting rent or not. So, of course, the mortgages business, to my mind, is much better than the regular real estate rentals, apart from you're not building equity or doing the tax savings. But the numbers you can do are so much better. You can diversify your portfolio, and seconds in particular. Say you have $100,000 to invest. You know, you could take that $100,000 and you could buy one rental property cash somewhere in the South or Midwest, and you might make net a few $100s a month. Or with that money, maybe you could buy two defaulted first mortgages and either foreclose on them or get mortgage payments on fairly low value houses in the South or Midwest. Or with $100,000, you could buy 5 or 10 seconds. The leverage you create with seconds is phenomenal, right? There's the expression in real estate that leverage cuts both ways. Well, in seconds, it does cut both ways, but not equally. Seconds are the best place in this field to use asymmetric risk. They're like stock options. If you buy a second mortgage for $5,000 on a $100,000 house, say the first mortgage is water level. It's a $100,000 house, and the first mortgage is $100,000. You pay $5,000 for a $25,000 second that is totally underwater. Well, say the house appreciates $5,000 in 1 year. Already, your $5,000 invested is now covered in equity. And every year, say it appreciates another $5,000, and the borrower paying down the first mortgage at perhaps $5,000. Seconds are the only place in anywhere I know in the real estate world where if nothing is happening, you still win. If you're a landlord and nothing is happening, that means the tenants are not paying rent. If you're the first mortgage and nothing is happening, you're not getting paid. And furthermore, the house might be a meth house. It might get foreclosed for taxes. But if you've got a second and someone else is in first in front of you, yes, they are first in position of getting paid. But because of the risk they take, they also take care of a lot of your responsibilities. You think the first mortgage, you think the bank, like a large institutional bank, is going to let their collateral get foreclosed because someone didn't pay the sewer lien or pay the taxes? No way. You think they're going to let that property go uninsured? Absolutely not. They're taking care of this so much. And I'm primarily looking for defaulted seconds where the first is being paid. That said, I've done pretty well on seconds where the first is not getting paid, because you base your pricing on risk. If you're paying 1 to 5 cents on the dollar for a defaulted second behind a defaulted first, if you get 20 of those and 2 of them work out well, you're ahead. Go ahead.
I was going to say, so a little bit of kind of what you just laid out is what we've been essentially talking about all month, right? Like there's this really great opportunity where you have leverage, right, that can be applied when it comes to seconds. And of course, the value jumping by 5K and then paying down 5K is obviously, $100,000 house, a bit exaggerated, right? But it isn't exaggerated to say that they potentially would gain a value of 2 to 3 and then pay down, say, a 2 to 3 to reach that 5 stop, that 5 gap that you're referring to or what have you, right? I guess my question, to dive a little deeper on that is, you mentioned being able to make the money on either side, right? Nothing happening isn't necessarily a terrible thing, yada, yada, yada. You've made money with the first paying, the first not paying, all these different positions. What are some of those key elements to evaluating a second? What are some different elements to evaluating a second, say in the different categories of, say, a first paying or first not paying or what have you, that help you still win, right? Is there something that the listeners here can be doing to take action on particular deals they're finding? What are some of those key elements they can be evaluating?
So what I really like to look at is evaluating the borrower. And these are some very intangible, very difficult to quantify or make a formula for in a spreadsheet. We're looking for borrowers that have the capacity and the will to pay. If they have equity to cover the second, they have the capacity. Whether they have the will or not is usually the biggest bellwether is whether they're paying the first mortgage. Sometimes that's not known. I can tell you some of the things that are like my favorite niches are buying notes where the first is unknown. Because of Chapter 7 bankruptcy, because it's not reporting to credit. Are those your favorite because you can catch a deal, maybe because somebody else isn't necessarily as comfortable pulling the trigger in that space, or absolutely. I'm basically every real estate investor is looking for a deal. People fear uncertainty. So with seconds, you can diversify so much. You don't have to have a big win on every one. But, if you go in with I'll give you a specific example because I think this will help people understand. I paid $31,000 about a year and change ago for a defaulted second behind an unknown first on $1 million house in Walnut Creek, California, East Bay. That's $31,000. That's a lot of money. But in the real estate world, that's not that much, right? What percentage of 3.1% of the value of $1 million home? It's less than an FHA down payment. But if you bought that house with an FHA down payment and something goes south, you are on the hook for the rest of the entire $1 million. If this went wrong, I would lose $31,000. But if this went right, as it did, we didn't know what the balance of the first mortgage was. We didn't know what the status was. We didn't even know who the servicer was. We had some old information from about 3 years ago from the borrower's Chapter 7 bankruptcy. Since the Chapter 7 bankruptcy does not create a repayment plan and really doesn't change the lien of the first or second mortgage, the numbers in there could just be estimated. You don't actually know if they're not actually obligated to put the exact correct numbers for the first mortgage. We have no idea what happened to the first mortgage since 2011. They could have stopped paying. They could have had a dramatic modification, which added hundreds of thousands of dollars to the balance. So I took what I knew from 3 years ago from the Chapter 7 bankruptcy filing, and I took what I could find on title. Checking title is I would say, one of my number one best tips that I can share with people. Normally, when people are evaluating seconds, if they want to find out information about the first mortgage, they look on the credit report. Anytime I'm scrubbing a tape of notes, I always assume that every single thing on the tape is wrong until I've independently verified it.
The old trust but verify. It's one of our tenets of this show. Easily one of the edicts of what we'd like to talk about for sure.
Distrust but verify in this case. So
I like it.
I had to use a certain amount of instinct, but I checked title, and the title did not show the first was foreclosing. That doesn't mean the first is current, but they're not foreclosing now. They could start tomorrow after I spent the money on it. But it turned out what my instinct and my expectation was is right. The house is worth $1 million and a little bit of change. Chapter 7 bankruptcy, you can't just call up the borrowers and talk to them. The only thing you can do is foreclose and hope they will talk to you. The borrower was very cagey. He didn't want to tell us anything. The one thing we did get out of him in our brief conversations was he told us who the first mortgage was. Based on that, we could figure out roughly what the balance was. We figured out roughly the terms of the modification. The first was pretty much as I had expected, fairly accurate from what was in the bankruptcy filing. He owes $750 to the first mortgage. It's $1 million house. He owes me $150. He's got enough equity in the house. He could sell it and pay me off in full. If he makes us foreclose, then we've got enough to pay the realtor, get paid in full. And we always try to work with the borrower. Out of roughly 200 notes through my portfolio since I started in 2013, I've only ever foreclosed on 2 houses. We do everything we can to avoid foreclosing. If we have to foreclose, they really foreclosed on themselves by just refusing to cooperate or work with us in any way. So this borrower has a lot of options, right? He has the equity in the home. He has options to get out of this without getting foreclosed on. So I could have lost money. I took a gamble like this. Even if you bought 3 notes like that, say you had $100,000, you bought 3 notes like this. If 2 of them work out, I'm still doing great. In fact, if one of them worked out, I'm still doing great.
Sure. But in that particular scenario on that one, like you mentioned, you said your I was about to say superstition. Your knowledge, right? Your experience in the space, you knew kind of what you were looking for and those kinds of things. So for a lot of people that listen to this show, they're either just getting started in the whole entire space or just getting started in seconds or still trying to figure out where they want to work, right? Do they want to do first? Do they want to do seconds? Do they want to do a little bit of both? Things like that. For you, it's been recommended over the past few weeks by some other people who've been on the show talking about seconds. Their recommendation has been go by the pool, right? Like you mentioned, go by the pool of 5 to 10. Get your feet wet, figure out what's going on, those types of things. I mean, would you recommend someone really take a swing at 3 $30,000 seconds? Or more along the lines of what other people have recommended regarding that?
I would recommend, you're just starting out, buy $5,000 seconds. Or if you can find them, buy $1,000 seconds, buy unsecured debt. I mean, buy low consequence learning tools. You can find some worthless notes. Like find a note you could buy for a few $100s and test it out. Build your skills. You can take a lot of training classes, but going to the horse races is very different when you have got money on a horse. There's nothing like having a real consequence. But there's so much room for error in buying seconds. I mean, we've done well on notes that our assumptions were totally wrong. You can I always talk, and probably many of the other speakers have talked about emotional equity. People don't pay their mortgage because a piece of paper says they have to, and they don't think about their primary home just as an investment. This is where their kids and their pets live. If they can afford to pay, they will pay, regardless of the equity level in the house.
So what are you doing? You said that you haven't closed on a bunch. I agree. Emotional equity is a huge, motivator for people, obviously. So when you talk about you've got 200 plus, deals through the portfolio since 2013, only had to foreclose on 2. Now, obviously, the other 198, I would assume, have not been, home runs, right? You've obviously had some that just haven't worked out or what have you, but of the bulk majority that have and all that kind of stuff, how are you working it out with them? Obviously you have the conversation, everybody's different, but is there something that you're doing, say maybe a little bit differently that you don't think people might be to get that workout, right? I mean, you're working with people that you assume, you're looking at the financials, you're looking at the credit report and stuff like that. Are you just flat out saying, hey, what can you afford? I mean, how is that conversation typically going to get the rates of success that you guys are having?
So the thing that I can add that I don't know if other speakers have talked about, but it's certainly less commonly talked about, is patience, Grasshopper. We usually start foreclosure on people, but we try and get as good a gauge of them as we can. I'll give you another clear and specific example from our portfolio. We bought in, I think, early 2014, a small note. We paid $1,000 for a note on a not that great house in Florida that was like maybe water level or maybe underwater on the first at the time. One, Florida has crazy laws for foreclosure. It costs $2,000. Like, we paid $1,000 for this note. It would cost $2,000 just for the retainer for our lawyer to start foreclosure. We sent a door knocker to the house, which everyone does. And this lady was hopping mad. You're liars. I didn't borrow this money. You get out of here. I'm not paying. Okay, why would I spend $2,000 to foreclose on an underwater house on a borrower that is so clearly hostile? Doesn't make any sense. Sat tight since 2014. I'm always going for the low-hanging fruit. You know what I want to deal with? Borrowers that are ready to come to the table and do something. This lady's attitude already, I could see she's going to be fighting tooth and nail. Then this title company in Chicago calls me earlier this year and says, yeah, we've been looking for ages. Is this your company? Do you hold the second lien on this property? Sure enough, we do. Well, the borrower is trying to refinance, and could you release your lien? Well, I can't talk to a title company without authorization about the personal affairs of this borrower, or I might be in violation of the Fair Debt Collection Practices Act and 16 different other laws, but we would really like to be in contact with this borrower. So we get in contact from some family friend representing the borrower. We got full written authorization to talk to this person who wants to sell the account at a discount. They said, hey, how about $5,000 to release the lien? Because she didn't even know about this at all. She thought this got settled with, when she modified her first mortgage, and she's never been contacted since. Okay, I'm not going to push the point too hard that we sent a door knocker to the house and she screamed at them. He offered $5,000 to settle it. I had to take it to committee. Committee said $5,000. She owes 13. No, we need 10 by the end of this month. Done. I had to wait 3 years, but all I had to do is sit tight.
I mean, that's great, but a little bit of that goes back to the original, what you said, where it's really easy to make money when you have a sack full of money already. So that's the benefit of the seconds, right? Like, that's what you're saying is you have to buy multiples, because this is something that's come up over the course of these past few weeks. There is going to be deals that you have to sit on, and that's great if you've got a sack of other deals that you can then work, right? I
paid $1,000 for this, right?
I agree. I just am, but it's still something to think about when it comes to doing this particular style, right? Like, you're gonna have to sit on some of these.
Yeah, I mean, you can turn your money probably in first mortgages a bit faster, but seconds, I think of it much more like regular real estate investing. You could have to, if you put in $10,000 in the first year, and then you get nothing for 5 years, and you get $60,000, you made 100% annually, but it took nothing until you had your 100% return 5 years later. I mean, the advantages of time on your side, borrowers. I think of this like the sandwich theory, and you guys can visualize me doing this with my hands, right? Imagine a sandwich, and on one side, it makes a V shape. In one side, the top and bottom piece of bread are stuck together, and the filling is in the middle, and the other side of the sandwich is open up like a V. Seconds are the filling in the sandwich. The top slice of the bread is the value of the property that goes up over the long term, though it may take some dips here and there on the way. The bottom slice of the bread is the balance of the first mortgage that is getting paid down every month, and the filling in the center of the sandwich is both the equity that is covered by the second that grows every month as the house goes up and the first mortgage goes down, and it's also the amount of debt that the borrower owes as their interest and fees on the second is growing and growing every month.
Mm-hmm. It's a very interesting way to look at it.
I was going to say, I don't think anyone's ever brought the sandwich theory to the show. We're 125 episodes in so far, and no one's ever brought that.
You guys never done the sandwich theory. Wow. Well, I'm happy to be of assistance.
I love that. That's awesome. So have you only ever done seconds? Have you ever dabbled in firsts, or has it only ever been seconds?
So I don't seek out firsts. I have bought firsts under some limited conditions, right? I'm not attached to seconds like I'm not attached to houses in California. What I want is seconds on high-value houses in non-judicial states. The reality is there are more of those in California than probably all the other non-judicial states combined. So that's where I have a lot of my portfolio. I'm not seeking California specifically. I'm seeking certain characteristics, and most of those are met in California. What I want in notes overall is I want cheap paper that the bank and seller is ultimately motivated to move. You know, notes sell at a discount, defaulted notes sell at a bigger discount, and defaulted seconds sell at an even bigger discount. When the bank is selling their seconds, usually they're selling both second position fixed rate loans and home equity lines of credit. And the reality is that majority of home equity lines of credit in this country, the vast majority of home equity lines of credit are in second position. These notes that we have in the HELOCs are virtually all originated 2003 to say 2007 or early 2008. However, there's no rule that says your HELOC has to be in second. If you got a free and clear house and you took a HELOC on it, remember when I said about we check the title report? The bank just sells all their HELOCs as if they were seconds and at the pricing of a second. I'm not opposed to buying firsts as long as I'm only paying a second's price. So we've got 5 firsts in the portfolio that the seller thought was a second. I'm good with that.
I'll buy those all day. You know, if you see any more of those, you know, just, you know, and you're just feeling so generous to let me know, I definitely would love that. One of the things that very few, and I don't really think too many have addressed really at all in this whole kind of week-long or month-long talk on seconds, where, and it's been the most frequently asked question via email since we started this, where can people find these deals? Is it different than where they can go find firsts? Obviously, there's going to be an overlap, but are there specific channels, work, effort? You know, what would kind of be your top 3 hitting points on how people can start finding these deals?
My number 1 hitting point is you need to go out and meet people face to face. I very rarely bought notes from people that I haven't met in person, mostly at conferences, right? I'm here in Portland, Oregon. There are very few people in the notes space here, and there's no one here that I know that sells notes. I go to PaperSource, go to IMN, which is coming up in a couple weeks, and I'll have a coupon code for people to register for that at a discount, but you just have to go establish trust with people. It's not like, you know, if you are a realtor, realtors are legally obligated to tell the absolute truth and everything they know about a house. You get a tape of notes. You the seller's like, yeah, it's probably right, but you know what? It's no skin off my back if it's wrong. You're buying these. You take the risk. You do your due diligence. And that's not – most people worry about the wrong risks. They worry about, what if the borrowers don't pay? Well, on one individual note, there is a risk that the borrowers don't pay. If you spread your risk over a reasonably sized pool of notes with certain known factors, like what's the value of the house, are the borrowers paying the first mortgage, you actually have a much lower risk, in my opinion, than you would have buying first mortgages, than investing in regular real estate rental properties. But the black swans are the thing you want to look for. It's not the notes that are worth, I don't know, the UPB is wrong by 5%. It's that, it's totally uncollectible. Maybe the seller is disreputable. Maybe they double sold these notes. Maybe they're not going to give you, you pay them the money, then they show you all the stuff and they don't give you clean collateral or a chain of assignments and you can't foreclose. Maybe the note is worth absolutely nothing. Maybe you give your money to someone who doesn't provide you the notes at all. You're going to have to sue
had
them.
that happen. We've had a really good friend of ours have that happen to him. So first one is obviously spend as much time as you can, either obviously afford or what have you, out at events, conferences, talks, different things like that.
So another thing is that this is a method, frankly, that I've put little work into. And if there's someone listening who's great at this and wants to participate in deals together, maybe we've got something going. You can search public records. You can search title. You can scrape title in their research services to find notes that are on public record. I've been looking for a number of years. I would like a house in a different location in the great city of Portland, Oregon, where I live. And like most places on the West Coast and many markets around the country, it's insane. It's like it's
bananas right now. It is bananas.
No inspections. What's that thing that history does over and over again?
So there's this great, for those of you that enjoy Twitter, there's this great Twitter account run by a random person called Bored Elon Musk. Everyone who, I would assume most people know who Elon Musk is, founder of Tesla and SpaceX and things like that. Anyway, it's like a parody Twitter account. And they recently, I think just yesterday, somebody, tweeted from that account, history often retweets itself, which I thought was very clever and funny. So yes, you're exactly right. There's another great quote I love, which is history, and I can't attribute it. I can't think of who it is, but they say that history doesn't often or always repeat itself, but it often rhymes, right? So you're exactly right with where you were headed, right? Like we're seeing these things all over the country, all over again, right?
Yeah. So people's in Portland, the standard thing, if you're a regular Joe and Jane American homeowner, you have to offer $50,000 above asking to even have a chance, and you still might lose out. I read a LA Times article, I think last week, that normal in the LA metro area is to offer $100,000 above asking. It is different. It's 2017. It is different than it was in 2007, in that credit was flowing to anyone who could fog a mirror in 2007. Now you really have to have excellent credit in order to qualify for a loan, though there are many people just paying cash. So the market is fundamentally different in that manner, but it's fundamentally the same in that the value of housing is dramatically outstripping people's earning capacity. It's not like people have these dramatically higher salaries to justify the increased cost in housing. It's just this one sector of the economy that's out of proportion to most other things. So I'm not buying a house retail here, but I checked the foreclosures listings and I found one. Oh, this looks interesting. This is an interesting house. Sure enough, the borrowers have done Chapter 7 bankruptcy. I look at the bankruptcy. Oh, there's a second on the house. And it's not the second is held by someone whose name I don't recognize. It's not Chase, Wells Fargo, Bank of America. Do a little Googling. It's just a small private lender in rural Southern Oregon. Go to the website and give the guy a call to make an offer. And it turns out he's a private lender. He's moderately sophisticated. He's like, no, I've got better offers than that. But there's a world of notes out there. You don't have to have someone deliver you a tape to your inbox. You can create your own tape and have dramatically less competition for those notes. I mean, if you're doing that method, you might be the only bidder.
Ooh,
that's really interesting. That's actually something I've been somewhat dabbling in, the Distressed Pro website that Chase interviewed a couple episodes ago. They have this whole bank mastery course, and while I've still scratched the surface on it, I'm interested to see what I can get out of it, because it goes in about talking to those smaller private lenders like what you're talking about and just making those relationships, because who knows, maybe they have whole tapes of notes that nobody's touched before.
Yeah, people who've been sitting on these in the shelf, they didn't even know. I mean, you get bankrupt ones. You could scrape bankruptcy records and find anything with a second in it, and that's going to be even like, I want like the good bad notes that other people don't understand. The more layers of complexity, right? Most people just, you tell them seconds and it blows their mind. Like, oh, it's too complex. It's too risky. Okay, there's another drop in price point. Oh, bankruptcy. Oh, that's too complex. That's too risky. For people who don't understand, there's another drop in price point. More buyers dropping out of competition to acquire those notes. And ones that are just out there that you have to really work your tail off even to find. It's a gold mine out there, and there's nothing stopping anyone from going after it.
Absolutely. As far as when you were talking about buying like those cheaper notes just to, use them as like training wheels, I myself, as somebody that has not bought a note yet, but will soon buy one, and my interest has peaked since this last month of learning about seconds. Is it really that feasible to go out and buy those $500,000 notes?
So buying one, I think, would be very difficult, though that said, there are public exchanges. To be honest, I have never bought a note off of public exchange, FCI exchange being the biggest one, but they certainly could be out there on FCI exchange. Normally, there's low dollar notes. It's kind of, if I'm scrubbing a tape of notes, normally, even if you've got a tape of 100 notes, I mean, most of the value in that tape is in the top 10 notes. Some of them at the bottom of the barrel, I don't even get to scrub at all. But if you're dropping, a very small amount of money on those, you put in a little bit, you get it as part of the deal, because the seller, they don't want to deal with pain and trouble. They want to move all of this inventory. And if you can get those cheaply enough, then you can have some very inexpensive lessons. I mean, there are educators out there in this field who charge enough for their courses that you could buy a pool of notes with that money.
Very true. Yeah. I like the whole more do rather than study aspect of it, getting your hands wet or your feet wet, just doing it.
Don't get me wrong. You do have to study and get yourself educated. But once you have a base foundation of knowledge, I mean, so many people want to learn just one more thing and just one more thing. I can tell you, when I started out in this business, I went to my first paper source in 2013. I was in a difficult position. I worked at a nothing special day job, and I had 2 paychecks every month. And one went to pay the mortgage on my house where I lived, and the other went to pay the mortgage on Bedlam and Millstone apartments in Kansas City, where 29 units could basically 29 units of rent at market rent of $400 each could only pay for enough for the repairs, for all the damage, and the evictions, for all the lawyer fees we had to pay. And my partner and I, we had to pay the mortgage for those apartment buildings out of pocket every month. Wow. So, okay, if I'm paying one paycheck on my house and one paycheck on Bedlam and Millstone apartments, there's nothing left to eat. So I started out renting the spare room in my house, and then eventually renting out the entire thing. And I would go stay at friends' houses or sleep on the floor at the office, or go camping or sleep in the car so I could meet my obligations. When I went to my first paper source, there was someone sleeping in my bed in my house while I was there. Paper source, and that paid for the plane ticket and the admission to get there. But sometimes paper source is a great place to go learn. It's pure education. There are no sales pitches, but there are people that I've met there that were there with me the first time I was there, and they're still getting just a little bit more education before they're ready to pull the trigger.
That's a really awesome story. Yeah, but don't get me wrong. I wasn't saying the whole, don't learn anything, just go buy notes, but more of that analysis paralysis type of thing where you just want to keep learning and learning and you never pull that trigger. So That's more where I was getting at. But yeah, that's
yeah. And this is such a great business to have a low consequence trial. You want to get started in the rental properties business. There's not much you can find in houses under $50,000. If there are, maybe that's not the one for you to start on. But notes, it's such a low barrier to entry. I'll tell you another thing. I can barely pay the mortgages, right? It's not like I had much cash sitting around. Chase, you'll appreciate, one of my favorite private lenders is Chase Bank. They got these great convenience checks that they send, 0% interest at the time. I think it was 0% interest, 2% fee, and 0% interest for maybe 15 or 16 months. Ooh. I bought some of my first notes with that.
Those are not the rates I'm going to give anyone, in case anyone's just listening to that. In case like the audio somehow skips and everyone thinks I am the Chase giving those deals out. Yeah. No, that's a way that a lot of people have funded their business, funded their deals, funded the first few that they've had to. I had a conversation with a couple of investors at this most recent paper source about them funding their first deals that way. So that way they had, pocket case studies to then walk around with, to then market for additional private capital from, say, a traditional JV or equity partner, right? Like that was the only way that they could essentially get started. And they weren't even with pretty favorable, now they weren't that favorable, but even with fairly favorable rates or, kind of introductory rates and things like that, they still weren't making a ton of money, if any at all, but they were essentially walked themselves into a really great case study, a really great deal, a really great something that they could market to then walk around and go, look, this isn't something I'm making up off the top of my head. This is a real deal. This is real business. This is a different way of investing in real estate where I don't have to worry about, the 3 T's, where I can be the bank, where we can, but they're able to walk around with that because they essentially use that strategy. Now they're not living on their mother's, floor or, on their mom's couch, in a lot of these cases where some people were, but they're essentially still able to, do those deals that way, which is just tremendous.
And JV or equity partners, they get a cut of the deal on the back end, right?
Yeah.
The bank whose name will leave out now, right? They didn't get any cut. They got a 2% fee, and I kept everything else.
Now, I want to be super respectful of your time. We're going to talk a little bit of IMN, like just a brief bit here towards the end, but we're going to be linking up one of my favorite pieces of content, essentially is what I'll call it, from really any person that we've ever interviewed on the show. And it's a video over on your YouTube channel, which in and of itself is just a strange and bizarre universe of a joke about having dysentery because you walked the Oregon Trail to like some really great, investment presentations from paper source to some intro sizzle reel for your the New Zealand, I believe you had a documentary happening out in New Zealand. Just a great YouTube channel, just a ton of different stuff, right? But you gave this talk about living a rich life. Right? Like how to live a rich life. And you had these really great kind of first core 3 principles. And one of which was this principle, right? It was a Japanese ikigai, right? Am I pronouncing that right?
Yeah, ikigai.
Yeah. And so it's something that I feel we've talked about on the show before without talking about it. Could you give just a brief understanding of that, almost a reason to give people to go watch this talk? I mean, you talk about something that I hold really near and dear to myself when I have conversations with investors now and just people in general, which is defining your own frame. And that's regarding, finances. And you talk about a really great principle about making a bigger chocolate bar. I mean, just these fun things. But that first principle of finding your ikigai is really cool and a really great way for people to frame up their life, right?
So I'm sure you guys, when you listened hard, you could see me making the hand gestures for the sandwich theory. I'm going to also be making the hand gestures here for the ikigai, but I'll also describe them, for people who can't like see through audio. Imagine 4 intersecting circles, somewhat like a clover, a circle on top, circle on bottom, circle on each side. There's one point in the center where they all meet and overlap. And the 4 circles represent what you love, what the world needs, what you can get paid for, and what you're good at. Where all those circles converge is your ikigai. It's your purpose for being. It's why you are here. It's, that's what you're here to do between the time you're born naked and helpless and the time you die. There's a lot of people who just follow your heart. Well, it's nice to follow your heart. I can tell you it's a lot easier when you got some money. You might be following your heart at something you're not any good at. You might be following your heart at something you're great at, but it's not really providing any value that the world needs. And frankly, there are some things that you can get paid very well for that the world doesn't really need. I had to make a crucial decision when I came back from New Zealand with a stack of awards for my film and needed to figure out a way to make money. If I wanted to continue in the film business, I would have to do something. The way to start out making money is making ads. Making ads to sell products is never going to be my ikigai. You can get paid for it. I could become good at it. It's definitely not what I love. And to my mind, it is most certainly not what the world needs, is more television and ads. So I had to make a very crucial decision. And here's what I love about the note business. You guys may have gathered from something in my voice, even if you can't hear it over the audio. My heart is on fire for this business. I love this business. You can do something. What does the world need? Well, banks need to get rid of their bad paper. And Joe and Jane homeowner who defaulted on their loan 3 to 5 years ago, what they need is a way to keep their house, a reasonable way, a compassionate way. They need to deal with someone who can actually evaluate their situation on a qualitative basis and not just through a spreadsheet or an algorithm. In this business, you can do that. You can give the world what it needs. You can do well by doing good. You can get paid. You guys got some of the examples. You've had some other incredible examples from the other speakers on the show. Let's not mince words about this, right? That part of the purpose of me being in this business is to live a life of freedom and abundance. And while money is not all of that, you cannot have that without money. I mean, you cannot buy happiness.
But money sure does help.
Yeah, you can't buy happiness. You can buy food, shelter, transportation, healthcare. Those are all commodities you can buy. And those things will not guarantee you happiness, but you cannot be happy without them.
I think they'll guarantee you the opportunity to the pursuit, because it's hard to pursue those things that make you happy if you're, can't eat or can't, don't have access to clean water, something like that, essentially, right?
Yeah, they're prerequisites to have happiness. They're not a guarantee. It's just a guarantee. Money can't buy you happiness, but poverty will guarantee you misery.
The thing that I loved about it is that it really brought to the fore one of my favorite quotes, and it's probably going to be the title card for this week's show, but it was Howard Thurman, I think, and he said, don't ask what the world needs, ask what makes you come alive, and then go do it, because what the world needs is people who have come alive, right? And that's what that is. It's not just go do what makes money or go do what makes you happy or follow your heart or what, like your passion, or it's all of that, right? Like in that concentrically, overlap circle analogy that you put up. And like I said, we'll link up to the video. There's a ton more great content in that, but I really loved that talk that you gave. I love that it happened at what looked like a real estate event, or at least a pseudo real estate event. It wasn't the traditional kind of talk that you'd expect to hear at an event like that. And so, I just appreciate that message. I appreciate the on-fireness you have for the industry, the energy, the attitude, and all of that stuff that you just bring to this space is so fantastic and contagious and energizing and all that kind of stuff. I just love it, man. I love what you do. It's great.
Thank you, Chicks. I mean, as you can gather, it is genuinely my pleasure. I mean, I love sharing this stuff. The purpose of my life is to share stories of great adventures with my 7 billion closest friends. And, when I came up with this purpose, I didn't actually realize that financial adventures are part of those adventures, like the adventure of going from sleeping on the floor to managing this portfolio has actually been a tremendous adventure. And furthermore, is going to provide the fuel for many, many other grand adventures, more of the outdoor variety.
Listen, that's one of the things that Robbie and I have talked about numerous times on the show, both the full story and portions of the story regarding our financial adventures prior to getting where we are at now. There's a great story, and I don't know when I'll tell it on the show, but it's about my first year at an event, very similar to your story regarding your first year at PaperSource. That is, it's a difficult story to tell just because of where I was, what was going on, and all that kind of stuff. And I might one day share it, but I appreciate you sharing, what you've done and where you've been. And for anybody that has an opportunity to make it out to the event we're about to talk about, I highly recommend it because you're going to want to have a conversation with Sndor about it. So let's talk a little bit about IMN. You're going to be out there giving a talk. What's it going to be on? Are you a part of a panel? What's going on out there?
Yeah, so it's the IMN Mortgage Notes Conference. It's happening in Dana Point, California, which is in Orange County, South LA metro area. It's June 8th and 9th. And if you want to register, you can find it at imn.org. There are a lot of great speakers. They organize the entire conference in a panel format, so you're getting a lot of different views and diversity of opinions from a lot of people that I respect and admire. And you can get 20% off registration with the code NOTED-FINANCIAL.
Noted Financial. And of course, that is where you can find all things you, at least from the financial perspective, is notedfinancial.com, correct?
That's right. And there's a link to the conference there. You can find more of the adventure, art, and creativity side at sndorlau.com. That's SANDORLAU.com. I don't know how Mom and Dad had the great vision and foresight to give me an eminently Googleable name when I was born, but they got a lot of things right in this life, and that was one of them.
They just knew it, right? They did the old Back to the Future thing. They had the almanac of like sports things, but they were like, nah, forget all that. We're just going to give them a Googleable name and an ability to get a .com. That's what we're going to do. I love it, man. So definitely go check out everything that you guys have. We'll have links, obviously, to everything in the show notes. I appreciate you taking the time talking about your seconds business.
Yeah, these were gold nuggets left and right. I've been taking down notes like nobody's business. So yeah, thank you for coming on.
I love it. And be sure whenever you're out at IMN to say hi to Mr. Woods and rib him a little bit for not being here. He's actually out in the Dominican Republic, I believe, Punta Cana, at a wedding for a hedge fund manager that I believe Sndor, Jack Krupe.
That's right. Yeah, I've seen the pictures online. That's good.
It looks like a hell of a time.
Maybe this is part of his purpose. I mean, it's a big blow to my ego, of course, that someone's purpose in life is like something more than listening to my interview. But guys, I really appreciate what you do. I listen to the podcast all the time. This is an incredible resource, a free resource for people. When I started just a few years ago, there was very limited information available publicly about this business. And people, I mean, if it matters to you, you will find a way. And if it doesn't, you will find an excuse. Now, with all of the free educational material out there, really anyone with internet connection can learn an incredible amount about this business. And Chase and David and Robbie, in your absence, you provide an incredible service and value to anyone who is willing to put in the effort and time to pursue their dreams and to pursue their ikigai.
Thank you so much. As always, if this is your first time here, be sure to head over to iTunes, give us a rating, give us a review, and of course, subscribe. If you're looking to go out to IMN, be sure to plug in the discount code that was so generously given to you, Noted Financial. Head over to notemba.com page to get all of the show notes. We'll have everything linked up, including that really sweet video where he gives this talk regarding all the things necessary to live a rich life. And be sure this week to tell 5 other people you know about the Note MBA podcast. We'll catch you guys next week. Bye.